we're going to just be watching here just now. I see no one has any questions as of yet. But if you do have a question for me, just throw it in the chat so we can make some moves here. See, as now we just broke down from our demand zone. What's going to be important here is, do we continue to go down or do we bounce up? If we don't bounce up, then we're simply just waiting for a reposition. So here we do have some green here. And it looks like it's going to start trending lower, guys. This is our entry right here. Okay. At that 52.98, 52.99. That's our entry right there, guys, if we're going to be grabbing puts. All right. Obviously, the move happened super quickly. We were on a downtrend, so it did give us some indication that we were supposed to be trending lower. However, we always look for confirmation. So even with this drop here, if you would have purchased puts here and not have waited for a retest, then you're potentially in red right now. Always wait for your retest. Okay. If you have a bias as to coming down, you may potentially want to purchase some puts over here, right? Knowing that your stop loss is somewhere up here. Okay. But with that being said, if you do scale in over here, at least you get to take your gains on this drop here, right? But if not, you just wait till your turn. Okay. Now we have buyers coming back in. Why? Because we fell below the demand zone. Okay. And because we fell below the demand zone, now buyers are coming in to buy up what seems to be a cheap price. Okay. Now the buyers are going to come in and buy it at a cheap price. Guess what? Until the sellers say, no, it's not cheap anymore. It's still expensive. And then they still bring it back down. That's when we potentially get to our 52.98, 52.99, 5,300 level. Okay. If we touch those levels, the first thing you're thinking about is doing what? Grabbing a put. Why? Because if we end up crossing above that level, that means that we would essentially set our stop loss and get out of there quickly. If we don't, we already know that there's much more room to the downside to go if we wait and pull in and pick up puts around this area, or even this area where the bottom of the demand zone is. Okay, that's the whole idea. Rufus said, if we break to the downside, how low do you think it will go? We could really just retrace the whole morning move. This is my next level here at 52.92. Okay, we could get there or we can't. It really just depends. As far as right now, I would say the lowest we would be able, I could predict that we could go would be 52.96 based on our next lowest lows. Okay. So we could potentially get down to 52.96 here. That's if sellers continue to take it down. Okay. But after 52.96, I'm seeing basically 52.92. And that's where that's before that rager early in the morning. Okay. Great question, Rufus. All right, 52.97 here and trending lower. This is our retest, guys. Remember I said we were going to be retesting our demand zone. That's exactly what happened here. Okay. So if you got into puts here confidently, knowing that we are retesting at that point in time, all we're doing now is just either taking profit or waiting for a longer leg to the downside. Um, if you're a newer trader, I always like to say it's better to take profits than to let them fall away. Okay. Especially if you have a lot of size in your contracts. A small move, if you pick up puts up here, you sell them down here, I'm telling you, that changes a lot of things. Okay. That changes a lot of things, but you need to make sure that you're understanding what you're looking at, why we're creating specific levels. Okay. We knew why we created this level. The reason why we created this one is because we had a pop-up after we came down here. Okay. All of these things are going to work together. Your levels, your EMAs, they're all going to work together for you. It wasn't a coincidence that once we crossed here is where we started going below our demand zone. Okay. It's not a coincidence. Just so you guys know. We have doji candles here. Usually that seems like exhaustion. We're going to potentially either go to the upside, touch the 90 MA, and then come back down, or we would hop back up from the demand zone. Okay. Everything you guys are hearing me say is me. These are my thoughts in my head on a moment by moment basis. Okay. So if you guys watch, like, what I would suggest you guys do is this. All right. This is what I would suggest you guys do. This is going to be the perfect thing for you guys to do. Listen to this, right? Take one of our old videos, our old when we are in the market, one of our older videos from when we were in the market, then pull up on demand. Okay. As you have on demand on, literally replay everything while you're also listening to the recording. Okay. And then trade the market and see if you can start getting your brain to see if you can start training your brain to think the way we talk about the market on a day-to-day basis. Okay. That's what you're going to want to do. You're going to want to play these recordings back and then be in the market at the same time, right? Put it on demand and then play them back. Trade them as you're hearing this. Okay? Like, there's going to be more things we're going to need to do to achieve the levels of success we're looking for. It's just not going to be enough to just join the calls and that's it, guys. We need to be running these videos back every single day as much as we can, okay, so that this information can stick to us. Because already having the information is a lot, but if you don't put it into practice, then it's not going to work for you, right? So we need to hone in on that, right? Aaron said, it seems like ever since we reached new highs in the market more than 2 weeks ago, the market has been going sideways with a few pops and drops along the way. What do you think is a factor with this sideways movement? That's a great question, Aaron. Um, in my opinion, anytime we hit all-time highs, there's always just weird stuff happening. Okay. Because there's buyers that want to continue to take it higher, and then there's people that are sellers that want to take profit along the way. So that's where you start seeing your big pops or your sideways moves. Okay. Like, at some point these prices get too agitated, like they get like the buyers and sellers, they get agitated at specific prices, and then somebody decides to take it a different direction. Okay, that's usually what happens when we hit all-time highs. So that's it's a typical occurrence, really. It's really just more so to say we need to figure out who's in control, at these bigger levels, right? Now that we've hit all-time highs. My favorite seasons in the market is when we've hit all-time highs and we know that it's not going to be seen in the foreseeable future, because then what happens is we get a lot of downside pressure, and it's a little bit more what's the word I'm looking for? Predictable. Okay. Lex says, thank you for the gems this morning, much needed. Absolutely, absolutely, guys. Um Do you think there will be a correction coming soon? I don't really know, to be honest with you guys. I don't know if there's going to be market correction. There's always market manipulation. I'll probably say I could guarantee there's more market manipulation than market correction. So yeah, our job really is to tell ourselves how could we be in the best situation and at the best time possible and stack the odds in our favor moment by moment. That's what we need to concern ourselves about, because at the end of the day, even if we do get a correction, how do you trade the correction, right? The question is, well, it depends on what's on the chart, because the correction might look like puts or they might look like calls. It's not going to look like one thing. A correction is not just going to look like puts. Why? Because there's still buyers in the market that are going to want to take cheap positions. And at the end of the day, we're trading the S&P 500. What does that mean? This is not just one company. This is a conglomerate of 500 companies, okay? So we're not just thinking about the idea of just one thing happening to correct the market. We're talking about different industries, different entities, oil, gas, the dollar, tech, right? Like, there's so many things that are within that. But that's a great question, Aaron. Barbara Jordan asks, what does on demand show you? On demand allows you to trade in the past. Okay. So if you click it, what it shows you is it gives you dates that you'll be able to trade, basically going back in time so that you can basically test out different theories, test strategies, just do different stuff basically. It just allows you to kind of time travel with trading so that you can at least in the past, so that you could learn what you did wrong. Do you have to put in a date? I mean, yeah, you're gonna have to put a date for whichever date you're gonna be trading on. So, but once you pull it up, it gives you a calendar. I'll show it real quick, guys. But it shows you a calendar right here. So you basically just choose which date you want to trade on, and then once you select go, everything changes and applies, and everything here just applies to whatever date you put. Then from that perspective, you could just, trade that day. So for instance, if you wanted to trade today, tomorrow, or trade what happened yesterday, you would just go to yesterday's date. What would that be? The third. Yeah, it's not even coming up. Maybe it's not even available yet. But yeah, so that's how you would do that. Um so what you're gonna want to do is, again, make sure that you're going through the process. Like, you want to make sure that it's not a situation where you're just aimlessly going back in time, right? Like, you want to make sure that you're going back in time to an extent where you're now able to um go through the market and see what it is you're supposed to see, or hear what it is you're supposed to hear based off of the recordings that we sent you guys. Okay. So that's on demand. Let me get it on demand. So we're right back here at 5,300. Climbing back into the range. And this is why it's so important for you guys to take profit, guys, because this is a clear H pattern here, right? Drop, right? Base and then drop. Okay, that's our H pattern. If you don't take profits here, that's on you. Okay. That is on you. Okay, because there's even down here, perfect opportunity to take profit, right? Are you looking for it to get all the way down there on the first move? It may never happen that way. Now, it might happen on the second or third try, you know, of us trying to touch the 50 and the 9 and things like that. But you gotta take the money when it's in front of you. You know what I mean? Like, um, so yeah. Right now we're hovering right around what is now our not demand zone now. This is gonna be considered supply zone. Why? Because we already broke below it. Okay. Now, if we break above it, what does it then become? It becomes demand again. Okay, so these are all red lines, and then this one is gonna be a green one, because it's that's where we have our support so far. Guys, if you trade like this, if you're making these levels, if you're drawing your trend lines like this, now you're not just looking at a blank chart. Like, things are actually gonna make sense to you as to why you're doing specific things. Okay. Having these big old red bars here, like big and thick red bars, and seeing the fact that we're not getting any upside, that even just seeing these red lines, it makes me even much more confident to buy puts. Does anybody feel like that? Like, I'm seeing us reject. It's almost like I'm like fortune telling with that. Like, I'm just gonna put it here, and then I'm just gonna wait for you to break above it. And if you never break above it, I'm just gonna stay in my puts, right? Because then if you do, and you start seeing downside pressure in this area, look at where it's going now. Downside pressure. It's almost like it's listening to me. That's crazy. But it's like, once you start seeing downside pressure, that's when you start taking your gains. Why are you why would we have to wait for anything else? Right? Maybe that there's different things you guys are gonna want to do in your trading to take it up another level. If you're not getting the results you're looking for pertaining to a day-to-day perspective, especially when we're in these markets, think about other things you can be doing in the meantime. Think about things you may not have even considered doing just yet, right? I remember when I first started trading, I was in the market from 9 to 4. Thank God. That's a terrible idea, right? But what it showed was my determination of trying to understand what I was looking for. So even if you're not trading from 9 to 4:30 every day, you could be in your meantime, you trade your hour and 30 minutes, and then you dive into the videos. Oh yeah, how did Wasi, how did Josh see that yesterday? How was he able to anticipate that? And now having the understanding, then you can go back in time, use on demand feature, go back in time and watch it play out so that you could know what you're supposed to look for when it happens in real time. That's the whole idea of it. Because if not, why are we even recording these videos, right? Take advantage of what you guys are hearing and are listening to on a day-to-day basis. And try your best to um, play these things back, because you're gonna hear gems, you're gonna find things that you can place within your trading so that you could be able to continue to become profitable, right? Um, Again, this area has been respected. We have not crossed above this area. Okay. We have not crossed above this area. So your bias for puts is still active. This is why you create levels, guys. Because if I take these two things off, which I really don't want to do, but if I take these two things off, nobody knows nothing. We don't know about nothing going on. We don't understand nothing. For the most part, the only thing we may be able to say is, all right, at least we're respecting the 50 EMA. But if you could tell, our zone takes care of the 50 EMA even within it, right? That's the whole idea. Are the videos you're talking about in the 2.0 course? Yes, they're in the 2.0 course. There are also some YouTube videos that we send into the Discord. If you go to the YouTube content section, okay? Anytime we go over our plays on a day-to-day basis, usually they are recorded, and based on whatever occurred in the market, you'll be able to follow along, okay? So go into the YouTube section and you'll see you'll see that there on YouTube section of Discord, or just go to our YouTube channel. You'll see it on YouTube as well. Um, all right, guys. So we're still hovering in this what is now our supply zone. Okay. Now, here's one thing to note as well. If we cross above these both of the this area here, and then we this would then become both of these would then become support. Okay, and then this would still be this area up here would still be our supply zone. So they would just essentially just switch over. That's all it would be. Barbara, if you could send either myself or Nick in Discord a DM, we'll get the course over to you after we confirm your email and things like that. You're welcome. So if we're gonna be getting through this area, the supply zone, then the next level is gonna be considered our new supply zone. Then this area down here is gonna be considered our this area down here is gonna then be considered our new demand. Okay, so that's what we're looking at currently. Aaron says, I'm working on my mid game too, seeing as the market has been in a range as of late, been studying trends, patterns, and to increase my confidence in which position I should take, setting take profit and stop losses accordingly. On demand is a great tool to test out strategies. I understand that no strategy has a 100% win rate, but having a plan slash strategy will at least give me a better edge understanding of what we're doing. Absolutely, Aaron. Absolutely. This is a stellar understanding of where you are in your journey. And I definitely salute you for being at this place. Understanding that no strategy has a 100% win rate. What that allows you to do is to be sober about your decision making, right? Telling yourself, hey, I'm doing well right here, but not being overzealous and thinking that you're gonna be greedy, right? So yeah, you made the right play, but now it's time to take profit, right? So when he says setting take profit and stop losses accordingly, that's literally saying like at every point in time, there's an understanding of why I'm doing what I'm doing. Okay. There's three things you need to master. You need to master why you're getting into the market, why you're getting out of the trade, and why you're staying in. Okay? Can somebody put that in the chat? Those are the three things you need to master as an options trader. You need to master why you're getting into the market, so your entry. You need to master why you're getting out of the market. Now, that's twofold. That's both take profit and stop loss. Okay. And then lastly, you need to know why you're staying in. At every single moment of your trade, you need to know all three things. You need to know all three things. You need to know your exits, your entry, and why you're staying in. Because you're going to have to tell yourself, okay, this is why I'm staying in this trade because of this. If you don't know why you're staying in a trade, then you shouldn't be in the trade. If you don't know why you're staying in a trade, you don't need to be in a trade. If you don't know why you entered into the trade, you should not be into that trade. If you don't know where you're supposed to exit, then you need to exit immediately. Those are the rules you need to stick to. Master why you're getting into the market, master why you're getting out, and master why you're staying in. Okay? Every single time you get into the market, that may be even something you may jot down on your journal entries. Okay? This is why I entered the market. This is why I exited this position. I exited because it went past this level. And if it went past this level, I was supposed to set a stop loss. If I entered and exited at this level, I exited here because this was my take profit target based off of whatever the case is. Okay. So if we're talking about the idea of, if we're talking about the idea of getting into the market, getting out of the market, and staying in, at that point in time, that allows us to know that we're better as traders. Okay. Because guess what? There's a large percentage of traders that literally cannot tell you why they got into a trade. Look at what happened here just now, guys. Look at this. Look at 511, 512. Where did we touch? Where did we touch? Which area did we touch? The top of the supply zone. I mean, the demand zone. Okay. Sorry, supply. This is supply now. We touched the top of the supply zone. What happened immediately after? We came down. We came down. Okay. We came down. So that's going to be something to really take heed of. Make sure you have your levels drawn. Make sure you understand why you're drawing your levels and go from there. Okay? If you're watching this currently, you definitely need to go back into the course. If you don't have the course yet, definitely send me a message. Okay? If everything I'm saying right now does not resonate whatsoever, you definitely need to go back and watch the videos. Okay? We have about 15 minutes left. Mike says, took my put at the last rejection at 1010 on the 1 minute chart after the doji and took my profit on a quick pop down. Absolutely. What would you look for if you thought downside can continue? If I thought downside could continue, I'm continuing to take, I'm never taking my eyes off the 50 EMA. We need to stay below the 50 EMA if I believe we're going to be going downside. Look at what's happening to the 50 and the 9 EMA right now. Can somebody tell me what C word is occurring because of these two EMAs? Please put it in the chat. Okay. You guys listen to me almost every week. You guys listen to me every week. Everybody should know.
Consolidation.
Consolidation. Thank you very much. Who said that? Who said that?
Mike White.
Thank you very much, Mike White. Mike White is one of our ringleaders here, guys. He said consolidation. Okay. Okay. Now, Mike, why is this considered consolidation? Could you tell us why is it considered based on the EMAs? Based on the EMA.
Because typically when the 9 and the 50 touch, there's consolidation or just sideways movement.
When the 9 and 50 touch, there is sideways momentum and consolidation. He said it there right there for you guys. If you don't know anything about consolidation, then you need to understand specifically just the fact that, listen, if these two lines are touching each other, our 9 and our 50, that means we're going sideways. Okay. Now, in the midst of us waiting to see which move we're going to, this is going to be very, very, very important. What we're going to want to see is we're going to see either higher lows or lower highs. I see Al Thompson here. I see Alec Emerson here. Okay. You guys were just with me just not too long ago, right? You guys are master traders at this point, understanding the idea of what? Higher lows and lower highs. Based on what we're seeing right here, guys, what are we seeing? Are we seeing higher lows or lower highs? Somebody let me know in the
Higher
chat.
lows.
We're seeing what, Al?
Higher lows.
Seeing higher lows. Now, based on higher lows, what is our interaction? What are we supposed to experience as a result of seeing higher lows?
Going up.
Going up. Thank you very much. Now, what changes our perspective? If we change our perspective on either going up or down, if we're saying we get higher lows, what do we then need to see in order to say, you know what, we're not going up anymore. We're actually going lower. What do we need to see? Same idea of higher lows, lower highs, lower lows, higher highs. What would
New
that be?
new information.
New information. And what specific new information, Al?
The opposite direction.
The
Um,
opposite direction. So if you said higher lows, what's the opposite of higher lows?
Lower highs.
Lower highs. Thank you very much, Alec. You had it right there, Al. Lower highs. Okay. Lower highs. After higher lows, if we're not seeing lower highs, then we're still thinking that it's going to be going to the upside. Okay. We're still thinking it's going to the upside. Something else we would be looking for. We would also be looking for what? Lower lows. Okay. So if this is a low, then if this candle becomes lower than this low, then that means we're potentially changing direction. Okay. But what are we seeing here with this candle? What is this candle right now? Alec, Al, I mean, anybody, let me know what this candle is. What did we just achieve here with this candle?
higher highs.
A higher high, Al. I didn't say anything but ask questions. You guys already got the answers. Was all of that just demonstrated just now? You guys already got the answers. Now, what did Al say earlier? New information will change everything. So unless we have new information, we're sticking to our bias, right? Unless we have new information, we're sticking to our bias. If we were able to take a quick scalp to the upside based off of that information, knowing that, all right, we're continuously creating higher lows, okay, then anytime we get a low, all we would consider doing is taking a small position and a small position into calls. Why? Because we know it's supposed to continue to trend upwards. Now, if it doesn't trend upwards, what do? You take your small loss, you get out of there, okay? Period. And that's the best place to be in as a trader, knowing why you're losing. A lot of you guys may not particularly know why you're losing when you started off being a trader. Now you have an understanding as to why you're losing. Okay. If you know why you're losing this trade, you're not waiting for it to go all the way to the bottom of the pits of hell. Okay. If you were in calls up here, where do you take your loss? Right here. Why? Because we created what? Al just said it, a lower low. Once we cross this level, you get out of that trade. That means all this loss right here below this green level, that means you don't cry over that. Okay. Because you weren't a part of that loss, right? Because you already took your that was where your stop loss is. Okay. That's the whole idea of trading, right? All right, look, now that we have what are we forming right here with this candle right here? Right? Or what was this candle as well? Both of these candles, they were both at a point considered lower lows. Thank you very much, Aaron. Lower lows. So if we continue having lower lows, then that means we're going down. Okay. Especially going down underneath what? The 50 EMA. Okay. This is a masterclass right now. I'm really glad we're recording because I really want you guys even to listen to you guys. I want you guys to listen to you guys think too, right? Because if I'm gonna be talking and you guys aren't interacting, then the information might not necessarily become become static for you. Okay. So you want to make sure that you're also responding back, even if you're by yourself, right? So with new information, you make different decisions. And guess what? We're still ranging now because at this point we're ranging between the 5,300 and 5,296. Now, if we know we're ranging here, what we tell ourselves is, okay, this is our new range. If we break out, we take calls. If we break down, we grab puts. Here's what we're really telling ourselves. If y'all spent all this while in this range and we finally dropped below here, that means nobody really wanted it. Okay? That means nobody really wanted it. Like you didn't want to you didn't want it. You didn't want it over here. If you're a buyer and you don't buy in here and you wait till you get all the way over here, okay? You wait till you get all the way down here. What you're telling the market is you weren't interested in that price. And that's why you see an H pattern. Okay? That's the thought process. That's the story behind the H pattern. You start trending to the downside because of that, right? At every moment in time, you're telling yourself what story is being told. What is the moment by moment analysis? If I take all of this stuff off the chart now, nobody knows anything. Okay? We don't know what's going on. We don't know who to call. We don't know what. I mean, now I can see the funny thing is I can see my levels like it's kind of like x-ray vision. Like I could see the levels already. I could see them, you know? But if you're not used to creating levels, then you don't all of this right here means nothing to you. Okay? Except for us still trending below the 50 because at least you know that much. At least you know if we're below the 50, our trend is usually to the downside. Unless what? We have new information that shows us higher lows, which would mean that we're going to be starting to trend to the upside. Okay? That's the main difference between the two. All right. So I'm going back to ES here. All right. So it looks like we broke the range just as predicted. Again, now it's going to be about a retest. This looks like it would potentially retest this level at 950, 52.96 and then continue trending down. Okay. But because we're already below the 50, taking put positions at the 50 is not a bad idea, right? Because what you're telling yourself is if you see a strong move to the upside, then that's your take profit level, okay? This would be your take profit level if you get in on puts at the 50, right? You're telling yourself, well, there's no reason why we would continue to the downside if we reach this level up here. So this would be where I tell myself my trade was not the direction I thought it would be in, okay? But guess what? If you never get up here and that means you start holding your puts. All right, I bought one here, I bought one here, I bought one here, 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 here. Let's just assume you just buy them until you can't buy them anymore. You know what I mean? Like, let's just assume that before you know it, you haven't even touched the 50 anymore and you're going downside. Now all you're doing is celebrating and high-fiving yourself or your family member, whoever's next to you, your office mate, whatever it is. Like, that's the whole idea of trading. Okay. We're not grabbing puts down here, right? We would grab them up here, or we would wait for a retest. This would be your retest, right? Potentially waiting for a 9 touch, or maybe grabbing one or two at this level, okay? Knowing that there's still going to be potential downside. But again, if we start to see a strong push to the upside, that's why you would decide to take your loss, right? If you get in, if you position yourself, even right here, you're telling yourself your 9 EMA is potentially your stop loss, okay? Or even your 50. But if you only get into a few contracts at a time at these levels, it allows you to then say, okay, I can allow myself room to breathe because if it does pop up, that could either allow me to double down, right? Because if we don't pop up to this level, we know that the put side is still activated. So you're potentially buying puts potentially one at a time up until it gets to this area. If we touch back up here and then the play is probably not active anymore, right? But since we potentially haven't, at least even as of yet, that would allow you to keep your put bias. Okay. Especially with red candles. Aaron says a mid to long strategy I'm implementing in the 5-minute market option strategy. It'll mark out the high, low, the first minute candle, depending on which direction it breaks to. At least 2 times in monitor. Yeah, yeah, good stuff. Yeah, I definitely like that strategy, Aaron. You know, and I think if it works for you, it should be something you continue to explore. and even refine as well. Okay. So good stuff, guys. We have about 4 minutes left. Does anybody have any more questions? Has this meeting even been helpful for you? Is this something you would want to watch back and listen to? I mean, let me know in the chat. Let me know using voice. Let's know that we're getting somewhere with this. Alex said yes. Excellent, excellent. Mike White says yes and more of it. Excellent, excellent. Excellent stuff. Excellent stuff. Al Thompson says yes, sir. Yes, sir.
Hey, Wasi, how's it going, man?
Hey, what's going on, Aaron?
Yeah, I think this has been a really good Zoom call,
Yeah.
um, and I know that you have some great advice and gems to drop.
Mm,
But also, I think it helps to come prepared with some questions because I think the
yeah.
meeting is just as good, is only as good as the people who participate, not just the one
Right.
um, who initiates it. So,
Correct.
you know,
Correct. Yeah. Yeah, I believe so too. That's definitely some great insight, Aaron. I definitely appreciate you for that. I mean, you guys have me for an entire hour, 30 minutes to an hour sometimes, right? At least once to twice a week. You guys have Josh as for the same amount of time. This is time for us to get some really insightful information in real time, right? So I love what Aaron said, because if you already have questions, we could address them in real time and even use real time data to address it. Because at that point in time, now you're able to tell yourself, wow, like I learned this and I'm watching it play out at the same time. You get to get your answer and your reward at the same time, right? But if you don't have the questions, then there's where are we going to start going to, right? Where could we glean to, right? I'm going to be talking about the markets so that we can make some money, but what's going to be more important than the money is the understanding, the mindset, right? Think about it this way. Just with the questions I was asking everybody and the answers that I was receiving, just those answers alone allow you to start considering the idea of how you're going to be able to do these things on your own, right? Every question that I asked you guys was answered correctly. Al answered questions correctly. Alec answered questions correctly. Mike answered questions correctly. There was nobody here I said had the wrong answer. Think about that. I asked questions and every single person that answered the question answered it correctly, right? That means the job is being done on you guys' perspective as far as the understanding. What now needs to be applied is the consistency and getting even much more deeper, going to another level, watching these videos even much more. The only reason as to why we are still who we are is because we're still reaching out for more information. Okay? If you joined us in 2021, we weren't using Bookmap, right? We weren't using a lot of these different things. Rufus said, when I trade, I hear you and Josh's voice. Rufus came, Rufus came October 2022. Okay. Rufus has been putting in the work. Okay. The idea, and I think, and yeah, Rufus came in person October 2022, right? In person, came to us in Charlotte and learned directly from us in person. And now what he's telling you is that he watches so much video, he's been in tune so much that even when he's on his own, he could hear us calling out whatever it is potentially is going on at the time. Now, granted, that's really trading at the subconscious level, because it's really not what Rufus is saying is that the information that that Josh and I gave him is what's allowing him to even be much more confident, because he was able to put it in practice in real time, right? Because for many people, if it's just hearing my voice and not taking action, then you're not going to get the benefit. But why we're going to be able to get the benefit is when we take action after hearing, right? We got to be doers. We can't just be hearers, right? We have to be doers. Okay. Terry Long says, thank you, YC. You shared some great information. You're welcome. You're welcome. Today was helpful. Would like more like this. Great stuff, guys. Listen, we get stuff more like this when you guys bring questions. That's the funny part about it. right? So we're gonna always be able to learn from each other when you guys bring, some things as well, right? I'm gonna give you guys what I got, you guys give me what you got, and then we work together and figure things out. So um, that's what that's gonna look like. So